Good afternoon and welcome to the Wealth of Advice market update on the 24th of April 2020. We're now another week into the lockdown. The government said last week that this current period of lockdown would last 3 weeks, but we are starting to see from governments around the world lockdown measures starting to be eased. The UK government is now talking about how we're going to start relaxing our lockdown measures because we have to get working again. The economy has to start moving. Global infections around the world peaked, we believe, on the 11th of April, and we're now expecting and forecasting that global lockdowns are going to be lifted by mid-June. You're starting to see different governments trying to achieve different things in their own countries. In our country, the government announced yesterday, or told yesterday, that house builders should start working again, car manufacturers should start again. This is all positive for the economy. Also, politically for them as well, they've got to be seen to be doing stuff. Socially, we need to be let out a bit more than what we have been, as people are going to start going stir crazy. I don't know if you all are yet, but hopefully these updates will give you some reassurance that the people managing your funds and what we're doing as well is starting to see some green shoots that things are going to start returning to normal. That said, it's anticipated that social distancing will remain all the way through until we get a vaccine that can be given to the whole population. The best case scenario for that is still Q2 of 2021, so that's going to be at least a year from now. Donald Trump, who we'll talk about a bit more later, is really worried that the effect of the virus will really dampen his re-election chances. You're starting to see his approval ratings fall over the last week or so. The presidential election is due to be held in November, so we're now around 6 to 7 months away from that. The sitting president normally has an advantage going into a re-election if he wants to be re-elected, but Trump is starting to lose that. The unemployment figures of 26 million is a high-water in sight. America has some of the weakest employment laws, so employees don't really have that many rights, which is why 26 million can be sort of sacked or laid off very, very quickly. Obviously, the US have put a huge stimulus package in place to help those people, but we're reading stories that people aren't able to claim these things. The websites keep crashing, and it is difficult for them to get this stimulus into their own back pocket. Small businesses have gone under and are getting in serious difficulty. So the Americans have really got to try and figure out how they get this working properly. Oil prices this week was huge in the news, where it was effectively in a negative position that it was costing more to produce oil than what it was able to sell oil for, and that's because nobody's using oil. Around the world, the demand for oil has absolutely collapsed. In normal times, such an event would have seen the markets collapse massively. That didn't happen. Again, anyone looking at this thinking, well, why is the markets not collapsed on Tuesday? I think it was when this came in news, and that's because the markets fell so much during the month of February into early March. The markets have really fallen to a point where they're going much further from where they are now. Inflation is running really low as well. That's also down to oil prices being really low. So this can have a positive for the economy when things do start returning to normal in a few weeks. Hopefully that when big manufacturers want to start producing again, the cost of energy, the cost of buying oil and that sort of thing will be much lower. So that can have a positive impact as well. But it was absolutely crazy to see what happened with the oil price earlier on in the week. If you remember the last decade, our government went into austerity measures whereby government spending was reduced massively in all areas. There has now been a change in expectation that governments just believe they can spend their way out of any problem. So the level of government debt is going to increase and increase. That may have further problems down the line, but right now, what we're seeing the benefit of that, and what the fund managers are saying, is a great thing because it's fueling the financial sort of stimulus into the financial markets, which is shoring up the valuations of clients' investments. We spoke with Janice Henderson earlier on in the week regarding their corporate bond fund, and again their bond fund manager said she was more optimistic about the future performance of that bond fund than she's ever been previously, because valuations are now in a place. And the similar messages were coming back from the stocks and shares fund managers, that they think that the value of funds to investing into are now in a good value to be getting into. as I said, we are easing ourselves out of lockdown. Matt Hancock has been making some announcements and trying to sort of reassure the country that certain sectors will start working again. Up in Scotland, we saw Nicola Sturgeon set out how Scotland aimed to have an exit strategy coming out of lockdown. The Welsh Government has announced a traffic light system. It is a little bit worrying that the UK ministers who are in charge have not been more forthcoming like Nicola Sturgeon and the Welsh counterparts have done, with like a roadmap, if you like, of how they expect the lockdown to end. Said last week we would hope to have seen Boris back behind his desk working. We haven't seen that yet. That's a little bit of cause for concern. But the positive thing, as I said, is that we are appearing to come out of lockdown, and people have got to be sensible with that. I don't believe we're going to have a normal end to 2020. Whatever we do coming out of lockdown, it's expected pubs, restaurants, bars and such like will be the last to reopen, but there will be some kind of normality that people who are non-essential jobs will be able to go back to working, which is obviously going to be a positive thing. We have also Matt Hancock yesterday that there's going to be more testing of individuals in key jobs. There's going to be more contact tracing to find out who's got who's had the virus, whether you're safe to go in certain places. So these are positive things, and the markets definitely like them. The government website, which went live today with the additional tests that were available for people who are in essential work occupations. I believe all the tests were taken up within 2 minutes, and the website effectively crashed thereafter. So we are looking to, or the government are looking to get more and more people tested. He did say a few weeks ago that he wanted 100,000 people a day testing by the end of April. Basically, that was, well, we're reading that was just a made-up figure, which we don't believe is accurate at all. But it is positive that more tests are available. There's more testing centres up and down the country. Tests are going to be sent out to people's houses. Crucially, for anyone who's getting these tests, it is saying that it will tell you if you've got the illness right now. It's not able to tell you if you've had it previously, which I think a lot of people were hoping for. The contact tracing of those infected is going to be a big thing as well as we move forward over the next few months. Find where there's been a hotspot of people catching the virus. It's believed that there will be an app on your phone that will be able to tell you that if you're going into a certain location and there's been lots of people there previously who've had virus, then you can avoid going there. This is all sort of technology really coming through quicker than it would have done in previous times to help us get through the next few months and try and avoid more people catching the virus. As in previous weeks, we give an update on our main portfolios that we invest clients' money into, the Royal London portfolios and our Risk Score 2 and 3 portfolio. The Risk Score 2 portfolio from 100,000 on the 23rd of February is now worth 90,110, and the Risk Score 3 portfolio is 88,682. So we can see from that line over the last fortnight or so that things have levelled off and are increasing slightly. We're not seeing the days where we've got -4, -5, -6, -10% one day. I remember like we had at this point sort of going into the end of March. The Royal London portfolios as well, they bounced back and they're sort of seeing a similar sort of line, if you like, across there. So we believe that the worst that the market had to give us has happened, and we are now in a recovery stage. What we need, going back to the previous slides about easing out of lockdown, is that this is done wisely, it's done sensibly by the powers that be, and we don't end up with a huge second wave of infections. I think that's my biggest concern with what's going on in America right now, is a huge secondary infection. If all of these people who are protesting that they've got a right to go out and work suddenly start infecting each other, you might have bigger problems in the next few weeks across there in the States, which is obviously worrying. When we've been speaking with the various fund managers this week, one or two said they would be more than happy to take any questions that any of our clients want to pose directly to them. We spoke with T. Rowe Price yesterday afternoon, and the guy from there said, yeah, if any of your clients have any specific questions, please ask away. Send me an email, cbro@wealthofadvice, and we'll forward those appropriate people. We've got good contacts with T. Rowe Price, Legal and General Investment Management, Janus Henderson, Royal London, all of the funds that we currently invest into, all of their fund managers are saying they're willing to, or they are very happy to answer any questions. You might be thinking of something that you wish to ask me. We can put this in next week's presentation, try and make it a little bit more interactive if you like. So if you have any questions on any of that, then yeah, please get in touch. Final slide. Just want us to remember, folks, no matter what the President of America said last night, please do not inject yourself disinfectant for treating coronavirus. It's absolutely scary that this guy is in charge, and he's got his finger on a button that can fire nuclear weapons. If you saw his presentation last night, where he said these things, it's absolutely crazy. You just have to look at the chief medical officer, the lady who was sat to his side. Her face was an absolute picture. He was saying this. So yeah, please don't try it at home. What Donald said, you might want to do last night. And that's the end of this week's presentation. Thank you for listening again. Hopefully come back with some positive news next week. This week has been a little bit flat market-wise, fund-wise, but hopefully next week some positive news comes through, and we've got something better or more uplifting to say. Thank you.